Now coming to the input CGST, input SGST, output CGST and output SGST, if it is given in the trial balance, then how we will do the treatment of these in the financial statement. For an example, in the trial balance, input CGST is 60,000, input SGST is 60, output CGST is 45 and output SGST is 45. Here input CGST will be adjusted with the output CGST. Yes, so input CGST is 60 and output CGST is 45. So input CGST is more than output CGST, then this will be reflected in the balance sheet asset side. So you write in the asset side input CGST, input CGST 60,000, you write it in the inner column and deduct the output CGST 45,000, deduct it and write the final figure in the outer column in the asset side, because input CGST is more than output CGST. The CGST paid by you is more than the CGST received by you. Similarly, input SGST will be adjusted with the output SGST, and here the input SGST is 60,000 whereas the output SGST is 40, which is less than that. So input CGST is greater than this amount, so this will be shown in the asset side. So you write here input SGST, input SGST 60,000 less output SGST 45,000, deducted 45,000, you deduct it and write the amount in the outer column. Okay, write the amount in the outer column, because input CGST and input SGST is greater than, more than the output CGST or SGST, then this will be reflected in the asset side. Vice versa, if this will be more and this will be less, means CGST collection will be more and CGST paid will be less, paid is less, then that will be reflected in the liability side. Is it clear? Now see the another case where output CGST and output SGST is more and input CGST and input SGST is less. Case number 2. So when the output CGST is more, means CGST collected by the company or collected by the business is more and CGST paid by the company is less, then that will be shown in the liability side. So output CGST is more, it is 90,000, whereas input CGST is 70, which is less than the output CGST. Okay, then this will be reflected in the liability side. This will be reflected in the liability side because the company will pay this in the next financial year. Similarly, output SGST will be adjusted with the input SGST, and here output SGST is more and input SGST is less. Then this will be reflected in the liability side. Output SGST, that is 90,000. You deduct the input SGST, input SGST, that is 70,000. You deduct it. Rest amount will be in the liability side. Is it clear? So if the output CGST or SGST is more and input is less, then this will be shown in the liability side, and vice versa will be shown in the asset side. This is the case number 2. Is it clear? Case number 2. Now see the adjustment related to GST adjustment in the financial statement. Number 1, GST levied on outstanding expenses. If outstanding expenses is given in the adjustment, then how we'll do the treatment? Outstanding expenses is given in the adjustment, means after the just below the trial balance or outside the trial balance, the information of outstanding expenses is given and the information of GST is also given. Suppose rent. Suppose one of the outstanding expenses is rent. Outstanding rent is outstanding rent. About this it is given in the adjustment, outstanding rent. Suppose it is 10,000 is the outstanding rent, 10,000. Okay, and GST is inputs input CGST at the rate of 6% and output and input SGST is at the rate of 6%. This information is given. Okay, this information is given. So outstanding rent is 10,000, input CGST is 6%, input SGST is 6%. Then what will be the entry? Rent account debit, okay, rent account debit, input CGST account debit, input SGST account debit to outstanding rent, So rent is, outstanding rent is 10,000, this is 10,000 and CGST is 6%. So 6% of 10,000 is 600 and this is also 600. So here it is 11,200. 11,200. Is it clear? Is it clear? This is the adjustment entry. This is the adjustment entry related to outstanding expenses. Here the example I have taken the example of rent. So rent account debit 10,000 to input CGST 600, that is the 6% of this, and input SGST is also 6%. So outstanding rent is 11,200. If the outstanding rent is given inside the trial balance, then it's not an adjustment. If information of outstanding expenses or outstanding rent or any expenses is given inside the trial balance, then that is not an adjustment. Okay, so we will not do the treatment of, we will not calculate the input CGST and input SGST thereafter, because it is already done. The input CGST and input SGST treatment is already done. We will not do it separately because it's not an adjustment. This will only do when it is in the adjustment. Is it clear? This is one thing is very important. GST is not applicable on salary and wages. GST is not applicable on salary and wages. It is not applicable. Okay. Now coming to the next, prepaid expenses. If the information is given regarding the prepaid expenses in adjustment, then GST is not going to calculate on prepaid expenses. Is it clear? If the prepaid expenses is given in the adjustment after the trial balance or outside the trial balance, if it is given, then the GST will not be calculated on prepaid expenses, because the GST is already paid at the time of the payment of that expenses, already done it. For example, suppose rent paid rupees 30,000, out of which rupees 6,000 is related to next financial year. Is it clear? Suppose this information, rent paid rupees 30,000, out of which 6,000 is related to the next financial year. Suppose the CGST input CGST is at the rate of 6% and input SGST is at the rate of 6%. Okay. When this rent is paid, on that time the entry already done it, rent account debit, input CGST account debit, input SGST account debit, to bank account. This entry is already done. Rent is 30,000 is the rent, 6% is the CGST, so 6% of 30,000 is 1800. 6% of what? 30,000. 6% of 30,000. This is also 1800. Input SGST. So total amount paid is 33,600. Later on it comes to our knowledge that the 6,000 is related to the next year. So at the time of adjustment, when we do the adjustment entry, that time the entry will be very simple. Prepaid rent account debit, to rent account, prepaid rent account debit to rent account, that is 6,000. prepaid rent account debit to rent account 6,000. This we will do it in adjustment. So GST is not calculated on prepaid expenses at the time of adjustment, because already it is entry is done when the rent is paid or that expenses is paid. So at the time of adjustment, that input CGST or input SGST is not to be calculated or entry will not be done. So prepaid rent account debit to rent account, that is 6,000. Is it clear? Now coming to the next adjustment, GST related to accrued income, means income earned but not yet received. If the information of the accrued income is given in the adjustment, means outside the trial balance, then how will do the treatment? So suppose the commission is income. Commission received is, suppose in the adjustment, accrued commission is given in the adjustment, accrued commission is given in the adjustment. Accrued commission, suppose the is rupees 30,000 accrued commission, and CGST and SGST is applicable at the rate of 9%. CGST and SGST is applicable at the rate of 9%. Okay. So output CGST is at the rate of 9%, and SGST is also at the rate of the same 9%. Then what will be the adjustment entry? Then the adjustment entry for the same will be adjustment entry while preparing the financial statement. Accrued commission account will be debited, accrued commission account will be debited, accrued commission earned but not yet received. Okay, to commission received account will be credited, to output CGST, to output SGST account. So accrued commission is 30,000, is the accrued commission is 30,000. So this is 30,000. 30,000 is your accrued commission. So you calculate the commission received is this one, commission received is this one. You calculate the CGST at the rate of 9%. So 9% of 30,000, 2,700, 9% of 30,000, and again the 9% of 30,000, 27, and you add this 35,400. Accrued commission account will be debited by adding the output CGST and output SGST to the commission account, and then we will write the accrued commission. So accrued commission account will be debited with the 35,400. Is it clear? 35,400. This is the accounting treatment at the time of adjustment related to GST on accrued income. Any income which is earned but not yet received. Earned but not yet received. Similarly, suppose rent, accrued rent. Suppose accrued rent is 30,000. CGST and SGST is at the rate of 9%. So you write it accrued rent account debit. You write it over here, accrued rent account debit to rent received account, to rent received account. And your rent received is 30, 9% is the output CGST and 9% is the output SGST. And then you add it and write it. Okay, this is the adjustment entry which is related to the accrued income, which is given in the adjustment after the trial balance or outside the trial balance, and the information of GST is given. Then how will do the treatment, how will do the adjusting entry. Next is income received in advance. If it is given in the adjustment income received in advance, then we are not going to calculate or not going to do any adjustment related to GST, because GST is already received when that income is received by the company, by the business. Okay, when that income is received by the business, already on that time output CGST and output SGST is credited. So if related to that any such information is given in the adjustment related to income received in advance, any such income which was received in advance, information is given in the adjustment, means outside the trial balance, then keep it in your note that GST is not to be calculated on such income. Why? Because already GST, entry of GST is done when such income is received by the company or by the business. Already that is credited, means output SGST or output CGST is already credited when that income is received. So in adjustment entry we are not going to do the calculations of GST on such income, means income received in advance. Okay, if the transactions outside the state, then if the transaction purchase and sale is outside the state, then the integrated GST will come. Integrated GST, GST paid on purchase, input IGST, input IGST means input integrated GST. At the time of sale, GST collected on sale is output IGST. Is it clear? When the transaction is outside the state, not within the state, intra-state, it is interstate, then the GST is input IGST when we purchase, and when we sell then output IGST. Okay, so suppose in the trial balance input IGST is 1,10,000 and output IGST is 95,000. So input IGST is more than output IGST, then this will be reflected in the asset side. Input IGST, it is 1,10,000 less output IGST, it is 95,000 deducted, and write the figure in the outer column 15,000. Is it clear? So when the input IGST means you have paid more IGST and you have collect the less IGST, so prepaid IGST will be shown in the asset side just like a prepaid expenses, payment in advance payment. It's an assets. Vice versa, suppose here it is 90,000 and here it is 1 lakh. Then here the output IGST is more and input is less, then on that case this will be reflected in the liability side. Output IGST is 1 lakh, deduct less input IGST, that is 90,000. So 10,000 you write in the liability side because you have collected more and you have paid less. So the amount which is collected more, that become the liability for the business, liability for the company, that will be paid by the company in the next financial year or deposited to the government treasury. So we have to see which is more, input is more or output is more. If input is more and output is less, then this will be shown in the asset side, and if the output is more, output IGST is more and input IGST is less, then that will be shown in the liability side. That will be shown in the liability side. Is it clear? So this is related to outside state, GST related to outside state, then it is input IGST and output IGST. I means integrated GST. Now coming to the next, abnormal loss. What is abnormal loss? Sometime in a business, due to some reasons, unfavorable circumstances, the business faced some losses. Loss by fire, loss by accident, loss maybe by natural calamities, earthquake, whatever the reasons may be. If such loss is faced by the business, that loss is called abnormal loss. That is not the normal loss. It is not, this type of loss not happened every year. So that loss is abnormal loss. So come to the related to goods. When the goods which is purchased and lost by fire or lost by theft or lost by accident, then what entry we will do? Okay, what entry we will do if it is given in the adjustment? Goods lost by fire. Okay, for instance, goods lost by fire. So abnormal losses. So the entry will be lost by fire. Suppose goods lost by fire. So lost by fire account debit, and if it is lost by accident, then lost by accident account debit. To purchase account, as the goods is lost, so purchase account will be credited. To input CGST, this will be cancelled. To input SGST account. Okay, if it is a within the state, goods was purchased within the state, then it is related to input CGST and input SGST. But if it is related to interstate, then in place of these two, here input IGST account will be credited. IGST account will be credited. Okay, IGST account will be credited. So loss by fire account debit, and if it is lost by accident, then loss by accident account debit, and if it is a loss by theft, then loss by theft account debit to purchase account. If goods is lost or goods is theft, then purchase will be credited. Input CGST, input SGST if it is intra-state, and if it is interstate, then input IGST account will be credited. Is it clear? And thereafter this will be transferred to profit and loss account, debit to loss by fire. This will be transferred to profit and loss account. So while preparing the financial statement in trading account debit side, what you do, you deduct from the purchase. Loss by fire will be deduct from the purchase. Purchase is credited over here. So in trading account debit side, when we are writing the purchase debit side, so deduct loss by fire, this amount. And in profit and loss account, in debit side you write loss by fire. So the entry will be at two places. One in trading account debit side, this will be deducted from purchase, and second treatment will be in the profit and loss account debit side to loss by fire. Is it clear? To loss by fire. So this will be done in the two places, trading account debit side, from purchase this will be deducted, and profit and loss account debit side you write to loss by fire. If it is a uninsured goods is not insured. If the goods is insured, then definitely you will get the amount from the insurance company. So insurance, on that case insurance company account debit or insurance claim account debit, insurance company account debit or insurance claim account debit, that will not be transferred to profit and loss, because you have received 100% claim from the insurance company. If the company has received 100% claim from the insurance company, then there is no loss. So that will be transferred to insurance company, that claim amount. So you may debit the insurance company account or you may debit the insurance claim account debit. So on that case, if the goods is fully insured, then that will be deducted from the purchase in the trading account. We'll deduct it from the purchase, and in balance sheet asset side, this will be reflected in the balance sheet asset side, insurance company or insurance claim. Insurance company or insurance claim. Suppose here it is 1 lakh is the amount, 1 lakh is the loss, 1 lakh is the loss suppose, and this 1 lakh is received over here from the insurance company, admitted 100% claim. 100% claim is admitted by the insurance company, then there is no loss. Okay. So this insurance company will be reflected in the balance sheet asset side, maybe in the name of insurance company, or you may write the insurance claim, insurance claim, insurance claim account, claim account. Okay. If it is 100%, sometime it may happen that the company, after the loss, when we claim to the insurance company related to that loss, the insurance company may accept some part of it. Suppose insurance company only accepts 60% or 70%. 70% is accepted, rest is not accepted, then the rest amount will be transferred to PL account, profit and loss account. Rest will be transferred to profit and loss account. If 100% claim is not admitted by the insurance company, suppose only 70% claim, so 70,000 will be transferred to insurance company, 30,000 is the loss, to loss by fire 1 lakh. So the treatment in the final account will be from purchase, you deduct from the purchase, in the trading account debit side, from purchase you deduct it, loss by fire 1 lakh. Asset side insurance company 70,000, asset side balance sheet asset side 70,000, and this loss PL will be shown in the profit and loss account debit side to loss by fire 30,000. So in profit and loss account, debit side you write to loss by fire, how much amount you will write? 30,000. Which side? Debit side. In balance sheet Which side? Asset side. Asset side, you write insurance company 70,000, and in trading account, debit side, to purchase, you write the amount of purchase which is given in the trial balance and deduct loss by fire 1 lakh and write the net amount after that. You deduct loss by fire 1 lakh and write the amount thereafter in the outer column. Is it clear? Loss by fire 1 lakh. You write the loss by fire, deduct the loss by fire less loss by fire. How much? 1 lakh. Deduct it and then you write the amount in the outer column. This purchase which is given in the trial balance, from that amount you deduct the loss by fire 1 lakh. Profit and loss account debit side, this 30,000, 70,000 will be reflected in the asset side as insurance company or insurance claim, and trading account from purchase, this will be deducted. Is it clear? If any fixed assets is lost by fire or abnormal loss, if any such loss is occurred related to the fixed asset, suppose the building lost by fire. So loss by fire account debit, loss by fire account debit, loss by fire account debit to building account. Building account. And suppose that there is no insurance is done related to building, so this is complete loss. Suppose it's a 2 lakhs. Then what we will do, this loss by fire will be reflected in the profit and loss debit side. So this will be transferred to PL account, profit and loss account debit side, loss by fire debit side, and okay, loss by fire debit side of profit and loss. And in the balance sheet, asset side, which side? Asset side. Building, you write the amount of building in the inner column which is given in the trial balance and deduct loss by fire. How much it is? 2 lakhs is lost by fire. You write it and write the amount in the outer column. Suppose in the trial balance, building is 15 lakhs. Building is how much? 15 lakhs. And loss by fire is 2 lakhs. So write the 13 lakhs in the outer column in the balance sheet asset side. And this 2 lakhs will be shown in the profit and loss account debit side. Now suppose the building is insured and full payment is received from the insurance company. Then here you write the name insurance company account debit, insurance company account debit. Then on that case, insurance company will be shown in the asset side. Insurance company will be shown in the asset side. There is no loss. Is it clear? There is no loss, because this loss of by fire account debit and loss by fire account credit is cancelled. The ledger is closed. So building, this will be deducted from the building amount, and this insurance company will be reflected in the asset side. Next case, it may be the insurance company accepted, suppose 60%. So 60% of 2 lakh, 1 lakh 20. It means rest is not accepted by the insurance company. Then what we'll do? Then this will be transferred to PL account, profit and loss account. How much it is? 80,000 profit and loss. Then the treatment will be insurance company here 1,20,000, insurance company 1,20,000. Okay, loss by fire is this, correct? And in the profit and loss account, when you prepare the profit and loss account, in the account debit side you write loss by fire. What? Building lost by fire. How much you will write? You will write only this one, 80,000, because out of 2 lakhs, 1,20,000 is given by the insurance company or admitted by the insurance company. So the actual loss is 80,000. So this 80,000 will be reflected in the debit side of profit and loss account. Now coming to the next, goods given as charity, if it is given in the adjustment. So the entry, adjustment entry, charity account debit to purchase account, to input CGST, to input SGST account, to input CGST, to input SGST account. So this charity amount will be shown in the debit side of profit and loss account, and the purchase will be deducted from the purchase amount in the trading account debit side. From purchase this will be deducted less charity. So the treatment will be at 2 places. Trading account debit side, when we are going to write to purchase, which is given inside the trial balance, less charity. And in profit and loss account debit side, we will write to charity. Okay, to charity. And if the goods was purchased interstate, then instead of this one, then input IGST account will be, instead of this will be credited. Next is when the goods given or distributed as free sample. When the goods is given as a free sample, then it may be free sample account debit or advertisement account debit, because it's an expense. So it may be advertisement account debit because it is an advertising our goods, advertisement account debit. Okay, advertisement account debit, advertisement account debit to purchase account, to input CGST account, to input SGST account. This will be credited when it is intra-state within the state, and if it is outside the state, interstate, then to input IGST, integrated GST account will be credited. So in trading account we will deduct it from the purchase. Adjustment will be at 2 places. In trading account debit side, when we write the purchase which is given in the trial balance in the inner column, from that amount we will deduct this one, goods given as free sample. And in profit and loss account debit side we will write to advertisement, where in profit and loss account debit side we will write to advertisement. So treatment will be at 2 places. Trading account debit side, from purchase goods given as free sample will be deducted from purchase, and in profit and loss account debit side you write 2 advertisement in the 2 places. This will be, the treatment will be done at the 2 places in the income statement. This will not be shown in the balance sheet. If the proprietor withdraw the goods for his personal use, then it's a drawings and the information is given in the adjustment. Then what entry we will do? Drawing account debit, drawings account debit, goods is withdrawn, that's why purchase account will be cancelled, credited. To input CGST account, to input SGST account, and if it is related to interstate not intra-state, then to input IGST account, IGST account. So what will be the treatment? In trading account this will be deducted from purchase. Number 1, trading account debit side deducted from the purchase. This will be deducted from purchase first, and second, drawing will be deducted from capital in the balance sheet liability side. Balance sheet liability side from capital, this amount drawing will be deducted from capital in the liability side of the balance sheet, and trading account debit side from purchase this amount will be deducted. One adjustment is related to interest on loan, that is implied. It is not sometime given straight away in the question in the adjustment. It is not given straight away in the adjustment, but we have to see the question and then we find it out. It's a hidden adjustment. For example, in the trial balance, suppose in the trial balance as at 31st March 2020, okay, this is the trial balance as on this date. In the trial balance, loan is bank loan, rate of interest is 9% bank loan, suppose it is 50,000. The loan date is mentioned over here. This loan is taken on 1st October 2019, date of taking loan. Interest on loan is given over here. You calculate the interest on loan. 50,000 is the loan amount, rate of interest is 9%, and interest will be calculated from 1st October to 31st March, 6 months. 6 upon 12, this one is the interest amount. But suppose here it is given only 1500 interest is given over here. In the trial balance only this much information is given regarding interest on loan. So when we calculate it, the interest on loan as per this information, date of taking loan is 1st October, interest rate is 9%, then this should be this much, 22,250, okay. But in the trial balance it is given over here only 1500, it means rest is outstanding. So when you prepare the profit and loss account, so in profit and loss account debit side, this is debit side, definitely you will write to interest on loan, which is given in the trial balance is 1500, and then you add outstanding interest outstanding interest is how much? Outstanding interest is 1500 is given in the trial balance, so rest is 750 is the outstanding interest. So outer column you write the amount. In the outer column you write the amount 2250. Okay, rest is outstanding. And in balance sheet when you prepare the balance sheet, liability side, which side? Liability side, definitely this loan amount will be reflected. 9% bank loan is 50,000 is the, okay, and here outstanding interest on bank loan is how much? 750. This will reflect over here as well. So outstanding interest will be reflected in the profit and loss by adding this amount will be added to this amount, okay, and the 2250 we will write in the outer column, and as it is outstanding, so this will also be reflected in the balance sheet liability side. Which side? Liability side. This side is asset side. Okay, is it clear? This is implied, hidden. Sometimes the interest on loan is hidden. We have to see the information given in the trial balance and adjustment, accordingly we do the treatment. So be careful.